GKFX Prime presents the Market Analysis Webinar.
Hello everyone, welcome to another edition of the weekly webinar. Well, that was one of the most volatile weeks we've experienced in a while in financial markets. Gold soaring up to 8 months high over the, got as far as 1975 and then wiped out all those gains, dipped under 1900 again. Now it's hovering around that 1900 mark again. Big drop in stock markets, likewise big moves up in the dollar and then reversed again, similar kind of thing. So a theme that I'm going to cover in this webinar is that actually we're testing some big levels, gold and silver notably, the stock market notably, oil notably, and the dollar in different ways, but we haven't quite breached those levels yet, despite all the volatility. So I think a part of course, we've got the Russia-Ukraine war, but we're right up at these critical levels, and as of yet, we haven't really decisively breached them. So I'm going to talk about that. If there's anything else you'd like to talk about or comment on, please just drop a comment in the video. That's really good if you can. Otherwise, just click that like button. Go scroll to the bottom of your screen, smash that like button, and that means more people can see these videos, and that's great for us, and we really appreciate that. All right, so let's have a look at the euro to start with. We'll start with, as we usually do, start with forex, then go to the commodities, then go to the indices, then go to crypto. So starting at the weekly time frame, so using a multi-time frame analysis here, here's the point. Here's the low in the euro, and we've got our two matching highs here in terms of the big weekly fractals, the swing high there, and then the swing high there, which was matching, and then we've got exactly the same thing at the lows. Here's the swing low, and then here's the swing low again. Massive rejection off that level. So obviously euro crashed, dollar rallied in a flight to safety on the onset of the war, but we've not actually taken out the levels. And then we start in the new week, we're getting a bit of a rebound off the lows, despite a lot of new sanctions against Russia, including excluding some Russian banks from the SWIFT network, which is obviously very much a financial thing, and that is something that directly affects financial markets. The flow of Russian commodities around the globe, that's a significant thing, and a significant amount of dollars involved in that. And so that's that's potentially a big deal, but again, we've not taken out the level. Drop down to the daily chart, and you can see in a bit more granular detail here that we were obviously trying to base out, right? We had that kind of false breakout, rally to the top, couldn't get there, crash back down to the low, and again even gapped lower at the start of the new week, and then rallied up off the level again, right? So here was the close from last week, gapped down to the level, and then rallied up and filled the gap straight away. That filling the gap is normally positive in the direction of the fill. So as in this case, filling that downwards gap upwards is generally a bullish thing. That said, if we drop down to the 4-hour time frame, for the time being at least, you can see that we're in our sideways range. We crashed lower, and we put in a lower high, so that was that high, lower high, and this was a lower low than this one, but this one was a higher low, this one was a lower low. Again, been at choppy around the lows, not really making consistent downtrend like lower lows, but have made lower highs for now. So it's directionless on the immediate trading time frame, but we're dealing with a big level here that's at the moment holding. So opportunities to trade with this big level remain interesting. I think it's very telling that actually the dollar, which is a big haven asset, has not really been able to decisively rally on a big Eastern European conflict and the prospect of more rate hikes from the Fed. And obviously that's part of the point here is, right, this Ukraine conflict means the Fed can't be as aggressive on rate hikes as the markets were expecting, and so less rate hikes in the US, potentially less strength in the dollar. So that's the question: is the dollar bottoming? And at the moment, it's the euro bottoming, and at the moment that seems to be possibly the case. We're holding the line at least. So similar story when I switch gears to the British pound. This is our weekly chart. Here's the really critical downsloping trend line. You know, we tested it for a fourth-ish time here, then a sort of fifth-ish time here, dropped away with that big bearish engulfing candle last week. But here's the thing: look, there's the swing low on the weekly basis. We spiked below it, but held it. So we didn't even get down to the annual lows in the pound. In the euro, we made fresh multi-year lows. Okay. In the pound, we didn't even get to the multi-year lows. So, okay, big spike in the dollar, but couldn't even take out the lows so far. Now, that's not to say we can't take out this low. Obviously, we don't, you know, if there's some big escalation in this war, maybe some other countries get involved to support Ukraine. Obviously, there's innumerous possibilities. It's almost, from a trading perspective, it's pointless trying to guess what will happen next in the war. But you can imagine that there are some possibilities that are much worse than what's happening now, and that would see more strength in the dollar probably as a haven asset, and that would see the euro and the pound drop. But for now, we can just see what's in front of us. This level, this low, is not being taken out, and for the time being, that's a higher low. And this low, okay, there's a spike below it. It's very volatile at the moment, but we didn't close the week below it. That's critical. And we didn't close the day below it. So it's no mistake that the pound crashed down, but closed just above this low. That's not a mistake. Where that's not a coincidence. The traders pushed the pound back up above that weekly closing level. Now again, a gap lower through that level today. You know, obviously that was last week's close. We opened up down here, so you know that's why there's two white candles in a row. We closed there and opened down here, but we've rallied straight up from that opening point. Again, trying to close back above this key level. And I think if we do close above here today, it's going to be quite a strong signal that the level can hold. And that would suggest to me that it's going to be hard to kind of undo this massive weakness, but it's building the case to get back up to test these highs. And then down on the 4-hour time frame, you can see in a bit more detail, that was, you know, the last massive spike low. I believe that was Thursday. Was that Thursday? Anyway, and then you can see that since then we had the kind of gap lower today, and then, you know, this is what we're dealing with. And all these, like, even on the lower time frames, you can see they're respecting this level. So that's the critical one. What is that? 133.50 basically. The 33.55, if we're being super precise, seems to be the level to watch. You know, if we get a daily close through there, it may be significantly lower, but that would be the confirmation we get. You know, obviously you can try and trade before the confirmation, but you know it's and that would just be in the direction of the trend. We've got a bit of a bounce off the lows. Do you want to try and sell for more weakness? At the moment, it looks like this level's holding, similar to the euro. So I'd be more inclined to trade to the upside, but I just don't see any really strong positive signal yet for why to trade to the upside. It probably needs to be a push over 134.40, which is about 90 pips above from here, but still it would mean a higher high on the trading time frame of the 4-hour chart. Let's go over to the dollar yen. Here's our weekly chart. So we double topped up here, and this is a bit of an interesting one to trade because obviously the dollar and the yen are both haven assets, both kind of haven currencies. So it's not clear which way this, if the movement of currencies is being driven by haven flows, you know, flight to safety, it's not always clear which one will win out, the dollar versus the yen, and dollar yen doesn't move as much, and it has been one of the least volatile pairs last week. But it's holding close to these highs. It's not even come down near the bottom of the range. So similar to like the euro and the pound, you know, they've held their lows and they're above them. Here, the dollar yen is has held its highs and is below it. So for now, it's respecting the highs, but no really clear evidence it's about to drop. This is like a really clear level through here. You can see these were the closing levels here, and look how many times we've just not been able to get through there. That is 115.65 if we're trying to be super precise. Let's drop down to the daily time frame, and we see that, yeah, pretty much this first peak, you can see that's been respected several times, and that's actually where we're dropping back from today. So first look at a move above 115.70, 165 to 70. Look for a close above that level, because that's not happened for a while, except this big drop ram up and then the drop back again. And then secondly, obviously the highs up here is 116.30. You know, a breakout above there. That's kind of the bullish signal that we need for kind of the resumption of the big uptrend in dollar yen. People are buying dips, expecting this level to take out. Obviously, once we're above that level, you don't want to be kind of initiating kind of really high number of pips trades, but you know, you basically, that's just the idea that the uptrend is intact, and so then you're not necessarily trading on the breakout, but you're just using the breakout to know which direction you should be trading. I.e., like if the breakout up is confirmed, you generally want to be taking long trades. Okay, let's just drop down to the 4-hour chart here, and you can see that we have had a little jump. If we can see that this is our kind of key level, right? We double bottom down here, so we tried to sell off, and we've double bottomed, and then we've taken out the neckline. We've respected that neckline a couple of times, and then we're trapped by this previous level we were talking about, 115.65. So these are the key levels to deal with. You know, there's buying opportunities down here at 115.20ish, but it's already worked twice. So I'd suggest that next time it gets down there, it's probably heading lower. And obviously, while we're below this 115.70, there's a possibility that this level holds and we could drop right down to these lower levels. So lots of levels trading at the moment. Try and trade around the levels. Try not to trade in between, because it just naturally means your take profit is smaller and your stop loss is bigger the further you are away from these critical levels. All right, let's have a look at gold. This is one of the more dramatic. I mentioned it first in the video. This has been one of the more dramatic moves. We can see this was our area of resistance that we've had in the chart for ages. Again, not a coincidence that the market spiked up to these highs up here. That the resistance here is more like 1960, but the actual high was, I believe, about 1975. So, you know, obviously it's a volatile market. We spiked up through the resistance, but then sellers came in, drove it right back down into this rising channel that we've seen for a while. And interestingly enough, you know, it depends where you draw this trend line, whether you draw it on this first candle or this second one, but we're actually just fallen away from it again at the start of this new week. Where similar thing, right? We've gapped up, whereas the dollar gapped up and the euro and the pound gapped down. Gold has gapped up as a haven, but now it's filling that gap on the downside, which is potentially another bearish sign after this massive bearish signal here. I mean, that's the market trying to be bullish and then sellers coming in and just whacking it down. And this is generally a pretty bearish sign, and it's from a big major resistance level. So, and now we've got a bit of a move up into it. So obviously this, had you sold right at the bottom of this candle, I mean, obviously this is a large stop loss if you were just putting your stop loss above the peak. But actually we're getting a retracement into the wick now of the candle. So some opportunities to sell if you think this is the, if you think this is the big, sign that gold needs to head much lower and it's still in its trading range and it's about to drop. Let's drop down to the daily chart. We can see things in a bit more detail. And yeah, again here, we spiked up, spiked down again, held the level, and now we're just respecting this kind of shorter term level, where we took, you remember we took out the highs, gold was looking really good up here. This was our previous peak, pulled back from it, then broke out, tested, and just had this massive volatile day, and involving a perfect test of this peak. There's the peak, there's the test, perfect. So this is the big one, that this would break down through 1877 and change would be the big bearish signal. And we've got a one just before that, which I think would probably still work. 1887 is sort of $10 above per ounce, and you can see that's being respected. So a drop through there as well would be an indication that we're heading lower in gold. So trend is up for the moment, but we're looking for signs that we make lower lows and follow through on this big bearish reversal. That said, on the flip side, if we get to get bullish again, I think if we start start closing the day above this rising trend line, that's kind of the confirmation we needed in this candle, which we didn't get the first time. But if we get it a couple of days later, it's okay, it still works. Silver, as you can imagine, very similar picture. Remember, we've had this downsloping trend line on our chart for a while, and absolutely, again, no coincidence. Whereas the euro and the pound, there was more of like a horizontal support. With gold and silver, it's this downsloping trend line resistance, but it's also a horizontal resistance too. This peak through here was the resistance, and that's where the sellers came in, popped just above it, false breakout, back under the declining trend line, and we closed down there. Now again, we've gapped up over the trend line at the start of the new week, but now we're what we have closed that gap, which is potentially another bearish signal similar to gold, adding on top of this bearish candlestick here. So again, trying to break these big levels, but so far not doing it. And my inclination for the time being would be to assume the levels hold until they break. Assuming they hold means trading with the support, buying at the support, selling at the resistance. Oil, again, another example here with just a big spike, false move out through the the top of the rising wedge that we've been talking about. I've been saying that this is a rising trend, but this wedge is a very bearish pattern, and it's kind of interesting. The market is pricing in supply disruptions from Ukraine. Russian oil and gas coming through Ukraine obviously is at risk of being disrupted, but for the time being it's not, and that could be a big bearish shock to the market if we just don't ever get any supply disruptions. Obviously, if we do get the supply disruptions, then we briefly moved through that big 100 level. In Brent, we've been comfortably above it. You can see here in WTI, we almost perfectly banged on the 100 level and reversed from it. So it's natural that some sellers would come in at that big 100 level and drive the price back under this, this dynamic resistance to the rising trend line. But the trend is still up. So again, I'm inclined to respect the resistance, but I'm wary of the fact that the trend is clearly higher here. So we haven't quite had our full confirmation. So here's a rising trend line. If I am going to go bearish on oil, which I'm not inclined to do at the moment because it is such a strong rising market, I've had a big bearish reversal pattern on the daily and the weekly chart at a big key resistance, the 100 level. Then I would like to see a confirmation that the market's now taking that signal to be bearish and starting to take out significant lows. First this one, then these two down here, and that would encompass this rising trend line. So that rising short-term trend would be reversed, and that would corroborate the bearish signal we've had on the longer-term trend to suggest that we could have actually a decent move back down for maybe another test of the 50-week moving average. So that's kind of the playbook there. This trend line is the support for now for the uptrend, and we could get more moves over 100. and we're holding above this big long-term trend line. If we can close the day above there, similar to as I was talking about with gold and silver, that was a down-sloping trend line. This one's an up-sloping trend line, but same idea. If we can close the day above it, that's a good bullish confirmation to suggest, well, okay, that was just some temporary selling that created this candle, and we're going to get bullish afterwards. Again, if we drop down through these lows, that's more like the bearish confirmation. And here's the stock market. So that was the big January crash low, and very interesting, and again, not a coincidence that we smashed through that level. And where we dropped down is also not particularly a coincidence. It's this previous weekly swing down here. We dropped temporarily through it, buyers came in, drove it right up through the two levels, and then we find ourselves back above this critical support, which is now I forget, it's at 4250. Yeah, 4250 really the big one. 4250, like maybe a 4230 to 50 range, is what we're dealing with. And you can see we spiked above it, and then we tried to come down to it at the start of the new week, and we're bouncing off it again. So again, the level holding for now is the theme across the market, that the big levels that are trying to break have not broken yet. What will trigger a possible break, again, who knows? But for the moment, that we just know they're holding. Here's the daily chart, and you can see we've it just so happens that it was where we looked at a swing low, and obviously we dropped through the swing low. Now we've come up to make a swing high, and it's come back up, not at the exact low down here. That did happen here. Now we've actually come back, and we're kind of testing more like this whole kind of supply area is this kind of area, right? So we're kind of testing the highs through here, through that low. We've rebounded that far, but we've not taken it out yet. So support is holding, but we've not taken out short-term resistance to suggest the short-term trend is reversing just yet. But you can see some strength coming in off the lows for sure. So in the stock market, a bit of a theme of dip buying coming in, but maybe after such heavy selling, there was always going to be a bit of a bounce. Let's see if it can actually last. One way for me to know if it will last is a move up through this peak that we formed last week. So make another higher high. And a first higher high for the daily time frame. Last but definitely not least is Bitcoin. You can see this is the short time frame and a bit of a base forming here, and potentially an inverse head and shoulders pattern. But let's look at the weekly chart first. There was a lot of criticism of Bitcoin, saying, okay, what happened? It's not a digital gold. That when all the volatility kicked in, Bitcoin sold off about 10%, whereas gold rallied 2-3%. But gold has since rolled off its highs pretty significantly. And Bitcoin, okay, 10% down, it's not good, but by Bitcoin standards, it can be a lot worse than 10%. We've seen 40% moves in Bitcoin on the basis of an Elon Musk tweet. So 10% on the start of a war, maybe you could argue it's not so bad. And then again, back to the idea of the levels, it's not taken out. It's not even come down to test our major support, which we've had on the chart forever now, at 28,500-ish. It's not even come down to even test. It's not even done a false break lower and closed above. It's not even done that for the January low at 33,000. It's just come back to these kind of closing levels here, which was more like 35,500. It spiked through that. Not even this level down here. Not even the spike low. It's spiked through this closing level. And now here's that consolidation, which I showed you on the 4-hour chart, is potentially interesting. So we're holding off the lows. Again, we could crash through the lows here, and we've had a bit of a bounce off them. So if you're still bearish, we've had a bit of a bounce, so some opportunities to sell. I'm just saying in terms of short-term levels, there seems to be a bit of a left shoulder, head, right shoulder potentially. So a break up through, a close, even intraday, above 39,400, I think could be pretty interesting. We've got the 2 moving averages there, so again, could be a chance to sell, but equally it could be the trigger for a big move up and a kind of reversal of this big downtrend. All right, so I think I'm going to leave it there. Thank you very much for watching this week. Good luck trading. Lots of opportunities at the moment with these volatile markets. Let's watch these big long-term levels and see if they get taken out this week. Good luck, and see you at the same time next week.